Hello everyone, you're welcome to the Blame FX. Today it's another beautiful day, a day that we are so delighted to speak with you, and we know somebody's gonna get value, okay, from what we are going to be teaching you right here. All right, it's our pleasure, okay, having you listening to us, our subscribers, okay. It does not matter your number, but what matters is your consistency in following up with what we drop, okay, and your abilities to learn something from what we are dropping is what keeps us going. All right, don't forget to hit the subscribe button. Don't forget to also hit the notification bell. Don't forget to drop your comments in the comment section, and of course give us a thumbs up, okay, and let's get started. At the Blame Forex Academy, we've had a whole lot of discussion lately about the psychological welfare of so many traders out there, and then we discovered that most traders don't understand how to plot their levels of support and resistance. Our previous video, we talked about how you'll be able to place trades on the crash 500 index, okay, make profits and all that. But the truth of the matter is there are some certain things you need to know, and if you don't know these things, you will not be able to utilize it. You will not be able to know when to buy or when to sell. The forex market tells you that you should buy low, sell high. Buying low and selling high, it's all about you understanding your levels of support and resistance. So I want to make it very simple for you right now. For you to plot your level of support and resistance, you must first of all, okay, know where exactly you need to take on your chart as a level of support or where you need to take as a level of resistance. Because if you want to play by the definition of support and resistance, okay, which states that support is any level where price reaches, changes direction, and continue to rise. So support, any level where price reaches, changes direction, and continue to rise. So you now say this level is a level of support. All right, then resistance is any level where price reaches, changes direction, and continue to fall. Now this level is a level of resistance. How am I taking this level as a level of resistance? Because if you look at it, price got to that level, all right, and then there was no other further movement to the upside. The price changed direction and all the way it came down. Okay, now this level is now a valid level for the price. Whenever the price is going to be pushing up, okay, from where it is now, whenever it's going to come to this level, price is going to respect that level, and then you now see price dropping down a little bit. Okay, how does it work? Price push all the way to this level down there. Okay, now this level now becomes another level, all right, because the price rejected this level and all the way it went up. Whenever price is going to come back down from this level, then it's going to respect that level again. Okay, now these levels where price got to change direction, okay, to the opposite side are levels you consider as your entry level. The level below your price is your buy level. The level above the price is your what? Sell level. So to those of you that always want to know when to place a buy and when to place a sell, I just give you a tip on how to place buy and how to place sell on the crash 500 index. Don't forget that our strategy is all about you going into the market, not spending too much time, taking just a few candles and coming out. All right, if you want to swing, that's a different thing that you need to understand certain things in the market. Our strategy with the stochastic oscillator is still very much valid, and people are making plenty of money with it. All right, now we are going to introduce the stochastic on the chart, all right, and how you'll be able to use it together with your levels of support and resistance. Okay, the next episode is going to be you trading with your stochastic and then using or applying your Fibonacci retracement tool. But today is the stochastic oscillator and the support and resistance levels. So first of all, support levels, resistance levels on this chart. The chart you're looking at is the daily time frame for the crash 500 index, and now I'm going to be placing this on my level of resistance. Like you can see right here, that's a level of resistance. Why? Because of this level. Okay, that level, it's a level of resistance. So don't bother asking why. You see that level, that's a level of resistance, and the resistance level is taken because of the last up close candle there. Okay, that last up close candle, that is the reason why we're taking that as our level of resistance. Your level of support is going to be the last down bearish candle. All right, the level of the close is the level where you take as your level of support. So I'm going to be placing this on the level of support. Okay, why? Because I'm dealing with the last bearish candle, the close of the what last bearish candle. As you can see, the close of that bearish candle, that is the level of support for me. You know why? Because your line chart respect the close of the bearish candle and the what close of the what bullish candle. If I switch this chart now to the line chart, then you're going to see that our levels were plotted at the exact last point on the line chart. All right, the exact last point on the line chart. So having plotted these and these, I've been able to plot a very nice level of resistance and support. Okay, with this, you now know what to do. But there are other levels if we want to look at it now. You see, there is a level here. You see that level? That's a level of support because the price is currently above that level. Okay, now look at this zone. Look at this zone. You see, there is another level here, and this is a level of resistance. Okay, because this level is currently above the price. Okay, so your level of resistance should always be what? Above the price. Your level of support should always be below the price. So all of these levels, all of these points where you see the line, changing direction from levels where you consider to be very important, okay, and levels where you can as well take trades in the market. Now, if the price of an index, the crash 500 index, drops down to the level of support for the first time, okay, that is going to make you what? Execute a buy order at the level of support, a major level, a major support for the first time. That is you having the advantage of placing a buy order. What makes you win in the market is how long you spend in the market. How long do you spend in the market? That determines how uh, profitable you're going to be, and then your losses are going to be what? Minimized. Okay, now a whole lot of persons are just so afraid of the spikes that comes in, okay, or the drops of the crash. They don't want it to hit them because if it does, it's going to make you lose some great amount of money and all that and all that. But the truth of the matter is, when you understand how to plot your level of support and then you also apply the principle of first time, okay, you would hardly get the spike hitting you. Okay, now if without the stoke I can place a buy from this level, okay, and then I might not spend up to 10 minutes in the market, few minutes, 5 minutes, I'm cool with it. Okay, as long as I have seen that the price just got to this level for the first time, okay, that first time I am going to what? Utilize all that opportunity and make few bucks, and I come out of the market. Okay, now this is a daily time frame. All right, this is the daily time frame. Sometimes you should know that you can calculate the market movements, okay, the momentum of the market movement with how you see the drops coming in. Okay, frequent drops should tell you that there are volumes applied. Okay, volumes are what applied in the market. Then you see the price dropping, 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 and dropping because what? Volumes are being what? Applied. Let's switch to the candlestick chart so you can understand what I'm saying. Okay, when volumes are in the market, okay, when volumes are in the market, like how it is, you see how price kept dropping from here down to this level. You understand that yes, sellers are in this market and the sellers keep investing more money in the market. Then at this point you see buyers coming in to change the direction of the market because maybe at this level sellers pulled out their profit and they are out of the market, so they don't want to know what is happening again. Okay, so the buyers are in and they are making their profit. Before you know it, the sellers might come in right now and then decide to take this price all the way down. Okay, we are just dealing with the daily time frame right now. Okay, so you see this level is a level, that level is a level, this is what a level. Okay, let's have our line placed on that level so you see that very well. Okay, I'm always using the close of the last bearish candle that was formed a low. Okay, the close of the last bearish candle that formed a low, and the what close of the last bullish candle that formed a high. Okay, not the entire high of the candle. Okay, now the close of the candle is what we are what making use of. Okay, the high and the low of the candle, they are not really strong. The close and the open of a candle, they are very very strong. Okay, yes, and our next strategy is going to be teaching you how to trade prior candles. Okay, so just stick around. All right, stick around. Follow us up on Telegram at BlameFX, okay, for you to have more of what we're doing. But for now, we are just looking at the support levels and resistance levels. Currently on the chart, you see we have two levels of resistance, okay, two major levels of resistance, okay, and now the price is approaching the level, the very first level. All right, and then you see all that reaction there, right? Good. Now if this price fails to go above this level, then you're going to be seeing price dropping down. Okay, but if it closes above this level, then you're going to see price trying to get to the upside. Okay, but now there is something you also need to understand. Like I said, it's not all about trading, it's all about understanding market trend. Look at what the market has been doing. I'm going to apply a trend line on this chart for you to see what I am seeing right now. Okay, let's look at that trend line. Now when you look at the trend line, you will now see that price has been reacting, okay, to this trend line. Okay, now if it breaks above this trend line, then you might see price push up very well. Then you know that the reach to the level of resistance is going to be what possible. So from this level to this level, I don't have to place any buy orders here. I would want to see price break above this level completely. Okay, even if the price closes outside of the trend line, I'm not going to place a buy order because there is a resistant level that is very close to where the price is. So price needs to break that level of resistance, okay, and then close above the level of resistance. A new candle should open above it, then I know that yes, price is likely going to go up. I start placing my buy orders. All right, that is you trading with your levels of resistance and support. If price comes to a level of support for the first time, you place your buy orders, okay, and then you book profit. You don't spend too much time in the market. The fishermen don't spend too much time, okay, when they go all out to what catch fishes. All right, the moment their net is full, they just make sure they pull out the net and then save whatever they were able to catch for the day, because if you don't do that, you are going to lose what you were able to get for the day. All right, so that is basically how to trade profitably. Okay, now the levels of support is important, right? Good, let's add the stochastic right now. I know you all have been waiting for this. Let's look at the stochastic oscillator. Okay, so we have the stoch oscillator. Look at the settings once again. Percent K level, period is 8, percent D period is 3, slowing is 3. We have price field low slash high. We have method simple. We have our styles. Okay, our styles, you see 3 pixels, so it will be very visible for me. Yeah, due to my site. You can change it to I don't know how you want it, but however you want it, you can keep it that way. Okay, so I click on done, and done, I have my stock right now. Okay, now look at what I was saying. Look at what I was saying. I'm going to be showing you this again. Look at what I was saying. Okay, see the stock? Price got to this level on the stock, right? Okay, got to this level on the stock down below. It fell below the level 20 because the stochastic has 3 levels that you can see now. Previously we talked about 2 levels. Today we're going to talk about 3 levels of the stochastic oscillator. Why? We have the 50 level. Okay, the 50 level is our take profit level. That is if we are swinging, if we want to hold trades for long, the levels where we want to take our profit is when price approaches the 50 level of the stochastic oscillator. Okay, but before you start placing buy orders that you want to hold until it gets to the level 50, then you make sure that the general trend of the market is bullish. If the market is not bullish, please do not attempt to do that. Do not force price to come to your direction. If you force the price to come to your direction, then it means that you're ready to lose money, okay, and you're bound to fail. Do you understand what I'm saying? Right now, let's look at this. Quickly switching over to. All right, I might have to take all these out so we have a fresher look on the next. Okay, I'm gonna leave this trend line. Okay, I'm gonna leave this daily trend line. Okay, so the daily trend line is gonna help us when we'll reduce the chart to lower time frame. So I'm changing the chart now to the 4 hours time frame. Guys, let's see what is happening. You see the trend line that we plotted on the daily is still very much valid. Okay, you see how the price is reacting to the trend line. All right, now there is no complete break out of the trend line, but rather on the 4 hours time frame you have the price consolidating. All right, on the 4 hours time frame you have the price consolidating. Okay, consolidating is known when the market is range. See that that's a ranging market structure there. Okay, price is just moving within that box and has not broken out of it. And of course that is happening on what? It is happening on the trend line. Okay, outside of the trend line, and here we want to see what? We want to see price break out of that consolidation phase, or you can call it contraction phase. All right, that's a contraction phase. When the price is trending, then that is what? An expansion phase. Like this is an expansion phase of the market. Okay, this is an expansion phase of the market. From here to this level is an expansion phase, a bearish expansion phase, bullish expansion phase. Then a contraction phase is basically when price is consolidating. Okay, now you know what expansion and contraction is in a very simplified way. What are you looking for right now? What is the stochastic telling you? Guys, let's see. You can see that the stock is currently coming down out of the below the level 80. The level 80 is known as the overbought level, while the level 20 is known as the oversold level. When the stock goes deep into the overbought level, all right, then you should understand that the trend is becoming stronger to the upside, and then it's going to get to a point when the market is going to exhaust all those strengths, and then it's going to be weak and might want to fall down a little bit. All right, because no matter how you run, you need oxygen. Okay, you need water to calm your temperature down. So the market also needs water. Okay, the market needs water. The market also respects soldiers whenever they reach the roadblock. All right, when they get to checkpoints, they must respect checkpoint by stopping there and waiting until they get their own search and all that and all that. Just try to play with real life experience and then put it in the forex market, and then you see that everything is just working just the way that it should be working. I want to believe you're following up with me what I'm saying right now, because the market is just in a contraction phase right now. The market is in a contraction phase right now. And why the market is in this phase, it is not advisable that you trade this phase except you know what to do around there. But today we're not talking about how to trade the contraction phase. Okay, so now you might want to see price break above that level. Okay, that level of 6248.307. A break above that level means price is going to push up. Okay, you see that that level of 62, okay, 48.307 is a very major level. Okay, let's take this down. You see that level? That's a level. Okay, that level, price respects that level. All right, it's respecting that level, so it's making the price to do all that. And of course the trend line is here. Now you see resistant level from the daily is also there. Price must close above that level, all right, for us to confirm a buy position. Above, outside of the contraction phase is going to be a buy for us. Okay, but if price remains in the contraction phase, then of course Of course, anything can happen, but until price dips out of it, then it's not going to come down. If it doesn't go above it, it's not going to go up. It's going to linger until it breaks out of that phase. Now, classifying this with the stochastic oscillator, you're going to see that the stock right now is dipping out of that level of 80 and coming down. So sellers at this level might want to exit if they are holding their sell at the level 50. Okay, at the level 50, while buyers are going to wait for this patiently to dip below the level 20 and then give us a crossing. A crossing is a signal that tells you that yes, the price is ready to push all up. All right. Okay, when the market crosses, then you have a signal for a buy. Okay, when the market crosses, now look at this, there was a cross, okay, a tight cross, but until the expansion came in, the market wouldn't move. Okay, there's always an expansion and contraction, both with the indicators or maybe your candlestick chart. Okay, so you see that tight movement, the green line crossed above the red line but slipping on each other. Okay, now that is a tight phase. Okay, if you look at the chart, you see that area price was ranging. Okay, now the same thing happens. There's going to be tight until you begin to see expansion. When you begin to see that expansion, okay, then you wait for the sharp bend. The sharp bend of the green line tells you that yes, the market has gathered enough momentum and it's going to be going up. The start stacking all your buy positions at that level. All right, you must not wait till price gets to the level 80 before you exit your trade. Okay, now we're looking at higher time frame here. And whatever you're doing with the higher time frame, then you don't have to qualify it with lower time frame. You know why? Because when you place a trade with higher time frame, if you're placing the trade with the 4 hours candle, then it means you want to see that 4 hours candle close completely. All right, and then you will now know if the market is going to continue to push up, or maybe you might want to exit your trade. Okay, so the psychology of the market, so many persons don't understand all this. Okay, if you're trading with a daily time frame, then it means you want to hold that trade until the close of the day. All right, for you to see how the market reacts and all that. So you've decided how much you want to lose in the market before you start talking about profit. Of course, your profit level is going to be two times of your what the loss. Okay, whatever you're setting aside for loss, okay, for your stop loss, okay, your profit is going to be two times or three times of your expectation. That is basically how to trade. Okay, now with the help of the stock indicator, all right, you now know that okay, the market is now getting enough momentum at that expansion phase where you now experience a sharp bend. Okay, that sharp bend, price expanded and then there was a sharp bend that tells you, oh boy, I'm ready to move. Then you see the candle here. All right, that movement boomed up. Okay, this broke out of this contraction, and of course what happens next? Price moved. All right, price moved all the way up. Yeah, now one candle is enough for you to come out of the market. One candle is enough for you to come out of the market because you can't tell what the market will do. All right, so if you want to trade, one candle is enough. If you're trading with a 1 minute time frame based on this stochastic oscillator, then one candle is enough for you to come out of the market because you can't tell what the next minute is going to do. Okay, the moment you notice the sharp bend on your 1 minute time frame, okay, that's expansion, okay, with the stochastic oscillator, then the next candle, okay, you should be coming out of the market. If your entry was on this candle, okay, that gave it a sharp bend, then at the close of it, you're coming out of the market. This is basically how to trade. If you're trading with a 1 minute, your entry is not going to last more than 1 minute. If you're trading with a 5 minutes, your entry should not last more than 5 minutes. Okay, please get this very straight. If you're trading with a 1 hour, then you're going to hold that trade for the next 1 hour. As long as you understand the trend of the market, understanding the general trend of the market is very, very important. If you don't understand the general trend of the market, then you are going to be playing and gambling with your money. Okay, don't say, hey, the Blim FX team, they said that each time there is a cross that I should go in. There will always be a cross. Even in the bearish market, there will always be a cross. Okay, There will always be a cross. But when there is a cross, it doesn't mean that you should just jump into the market without understanding the general trend of the market. That's foolishness if you do that. Oh, I want to make money. I've lost so much money while trading the crash 500. You've lost money because you've not patiently applied all that you should apply. You've not understood the market. Okay? You don't even know what parameters are in the market. You don't know, or you don't know, you just keep hearing. Okay? It's just like one of these funny comedy talks that I keep hearing. Do you get it? If you don't get it, forget about it. That's funny, right? That's funny. But the truth is, if you don't get what I'm saying, okay, try to understand what I'm saying. Don't jump into conclusion. Okay? Don't start executing trades because I said that you should be placing buy orders when there is what? A cross. There are criterias before you place the buy orders. Make sure there is, okay? Make sure that the market, the indicator is not slipping on each order, okay? You see that? It crossed and was tight. It moved up and continued that way until you see the sharp bend. That sharp bend, okay, tells you that I'm going to go up. And then you jump in, okay, which is this candle. Now, at the close of that candle, okay, before this other candle comes in, you're already out of the market. Whether the candle pushes up or down is none of your business, but you've made profit on this candle, right? That is smart trading. Now, look at how the market played around all the other hours, okay? You see that? Market played around all these hours. And then if you were holding this trade, what happens? You begin to feel like, oh, the market is not respecting certain principles. Now, of course, it's not like that. Market does, it respects it. Okay? In everything you do in the market, there is always a contraction and expansion phase. Okay? You must understand contraction and expansion phase. This is an expansion phase of the market. Okay? This is an expansion phase. All right? When the market is coming down that way. There is a contraction phase again in this market. All right, look at it. That's a contraction phase. Now when the market broke out of it, then that's an expansion. When the market broke out of it, that's an expansion. Okay, then price moved again, and then another contraction phase came in. Another contraction phase came in, right? As you can see, another contraction phase came right in. Then what happens? Let's look at it. What happens? What happens? Price broke out of it. That's another expansion. Okay, that's another expansion. So there will always be contraction and expansion, but you need to understand the trend of the market. When there is a break out of a contraction phase, you know that the price is going to go up. That is when you start placing your buy orders. Okay, when there is a break below the contraction phase, you know price is going to go down. You start placing your sell orders. Our next we are going to be talking about breakout, fake breakout, and true breakout. Okay, so you need to understand all these things that we just talked about. Very important. Okay, very very important. Now I have these things. I can mark all the contraction phases in this chart, and then I know when price is breaking out of it and all that and all that. But as long as it has gone out, okay, I'm going to take all this, okay, because the price is no longer there, and I'm dealing with the most current level. Always learn to deal with the most current level of your chart. It's very important. Learn to deal with the most current levels on your chart. All right, so switching to the 1 minute time frame, because I have just 1 minute to leave this place right now. Okay, let's look at this, how you can trade that crossing. Okay, now look at how the price crossed. Look at how it crossed there, right? You see that cross? That's an entry for you, because looking at the space between the green and the red, you see that there is enough space for the price to push up, right? So you jump in. Okay, one candle, two candle is enough for you to come out of the market. But this crossing must be below the level 20. Okay, it must happen below the level 20 for you to jump in. Okay, please understand that there must be what, an entry below the level 20. If you don't understand this strategy, then check our previous edition where we talked about this strategy, guys. You understand what I'm saying? Check the previous one. All right, look at what is happening here. Plenty of false signals. Okay, all these things, you don't bother yourself. Okay, I'm going to cite an example. in our next episode on how to understand when the market is pressured with your candlestick. Okay, I'm going to cite that for you. But for now, guys, please don't hesitate to subscribe to our Telegram channel at BleamFX. Hit the subscribe button right now and the notification bell, and of course leave a comment, ask whatever questions you want to ask, and then we are going to attend to you. And don't forget to give us a thumbs up. All right, your thumbs up is an encouragement for us to do more. Okay, we're expecting feedbacks from you on what we just said. Guys, make sure you're trading safe and doing the right thing in the market. Bye for now.